Hello everyone, good morning, it's the Cowboy. Welcome to Macro Cafe episode 12. And this is a place where we look at the macro field in general and just kind of make sense of everything that kind of goes on into the markets. We usually start here with Bitcoin, which is the newest asset class out there. We take a look at the oil and gold, and we follow the S&P 500, and then the dollar and the yields as well, because I think all these markets are really well connected, interrelated, and through this show I'm kind of trying to show what the market is thinking overall, and at least what I see when I look at all these asset classes, and kind of what's the bigger story that they're telling us. We can just look at Bitcoin in particular. I think we need to kind of have a feel for what's going on across the globe, and kind of how all these assets are interrelating. Guys, you can find me here at Elliott Wave Cafe on Telegram. There's a public channel in there. There is a premium room as well. There's a chat where you want to get in touch with me, you can get in there and just throw charts and comments, and any questions you have about this macro or about alts or Bitcoin in general. I'm pretty accessible there to respond to any questions. I'm also on Twitter at Elliott Cafe, for just kind of regular updates. You can find me there as well. So let's keep going in here. Bitcoin, it's been selling off. I've done a Bitcoin and Ethereum technical analysis about a week ago, and since then we've had a pretty heavy sell-off in Bitcoin. We've come as low as $30,000. I don't think the picture really changes much. We remain in a pretty good structural uptrend in here. We've had a nice correction between 2017 and March of last year, and we have begun a new uptrend in this asset class, and we've enjoyed a pretty solid year of bullish price action. Right, you've gone pretty much uninterrupted, with almost every single month since last year being a bullish month. I've talked about this month of April being a little bit of an indecision, and the risk of the market kind of stalling at these levels, and the risk of a little bit of a sell-off. As it's usually in the crypto land, the moment things kind of start to accelerate and break some key levels, a lot of leveraged positions get closed off, and a lot of people sell. I mean, it's totally normal, especially if let's say you bought it out 17 to 20,000 on a breakout and you're riding it up to 60. If you're a little bit, kind of a late comer into this trend, it's totally normal to maybe reduce some of the positions you have. If you're a, big hodler, this trend continues to be, I think, solid to the upside. How much the sell-off will continue remains to be seen. I mean, we still have another, let's say, 8-9 days into this month. So we'll continue to keep an eye on kind of how this closes. If we're managing to push a little bit higher and create more of a rejection week, something like this, I think that's going to be a pretty good indication that the trend is going to resume to the upside. If this wants to be more of a larger corrective pattern, that's also fine. We can, push it into the end of the year if needs to be. But again, structurally, I think we're in a pretty big uptrend, and I don't see Bitcoin selling off aggressively and coming back here towards 5,000, 2,500 or something like that. I think this trend remains clean, and and I kind of have to stay with the price, right? The moment you have a big structural change is the moment you actually break below this whatever this was, $4,000 level, those March lows, and then you're looking, let's say, at a much larger collapse or a much larger structural change in Bitcoin. Here is how it looks here onto the weekly charts. Again, the trend continues to be up. I mean, shorter term, we're just, correcting a little bit here. We have more of a kind of bearish sentiment, right, between this kind of 21-week moving average, this 20-week moving average. No, this is actually, I'm sorry, this is the 10-week. And then you have the 50 in here. And, as long as you're kind of between these levels, you kind of have to stay cautious and assume that you're probably going to get more of a sideways price action. You have to kind of regain back the 10-week, right, which is, sort of the 50-day moving average, before you can kind of turn fully more bullish. But we have been rejected from this 50-week moving average, and I think it's totally fine. The 200-week, it's back here at about 12,600, right? This is a major level, and as long as this kind of continues to look this way, I just continue to remain bullish and remain constructive on this space overall. Again, if you want to see more on the counts, you can come visit me on the Telegram room. I have there, mostly charts and daily presentations. I mean, on the Pro Room, we do this every single day, and I have videos about this, and we kind of dive down into all the counts and the possibilities, and we're actually long. We bought something on the 31,000 decline, just kind of longer term, and then we're trying to enjoy maybe some shorter term tactical bullish trades as the market is kind of trying to regain its footing. Jumping over to the oil market. So what am I seeing in here? This is a quarterly chart in the price of oil I talked about a couple of weeks ago too. So the major flush down that happened into the markets, right, with the COVID, took us negative oil, and since then we've done a pretty good recovery. And this is a super heavy bullish hammer, and this could have been just a flush out of this whole kind of negative outlook into the oil that started, let's say, back in 2008, 2009, since we've hit those 150 levels. And as the economy was kind of struggling and, being very, very sluggish across the globe, this was sort of reflected into the oil prices. And, I think, what this year kind of did into the market is kind of reshuffled and, restructured everything across the world, and we're about to possibly enter into a new period of growth. That's probably going to be reflected into the oil prices, almost like we've hit a reset button to this virus crisis that we had, and we're kind of stepping now into the new growth period. Oil for right now continues to kind of hover around $63 to $64 for a barrel of oil, and we still haven't broken yet through this downtrending channel that comes from 2008, 2009, and I think the moment this is going to get challenged, we're going to be looking at about $100, $150, maybe even $200 oil coming here into the next few years as the economy reopens, as the energy play continues to be very, very strong. I know there is a shift towards electrification and electric vehicles and all that, but the world is not going to stop using oil. If anything, I think we're going to use more of it. So, we're going to wait to see if we're going to get a breakup of these levels. Here is how it kind of looks onto the weekly charts. This back in here, it's a pretty massive level. I'll show it, right? It's just kind of back right there. So I'm not ready to really pull the trigger on any long oil trades just yet. I think there is plenty of time here, and just kind of we want to see what's going on the breakout, if we're going to be serious about it or if the market is going to fake us out and then pull back. So we're sitting right underneath this ultra important resistance, and the market might pull back a little bit in here, kind of regain its footing, maybe come back towards $54, right? We have this kind of base that's up into these levels, and I'm talking about this being more of a super nice inverted pattern where you have kind of a left shoulder in here, you have this massive flush into the price of oil. This is your head, and then you're recreating the base here to the right, and you need this kind of accumulation before you're going to start to break out and really hit it to the upside. Because if this inflation sentiment kind of continues, and we're continuing to get the numbers that we've been getting so far, I think oil is lagging a little bit in here, and it kind of needs to start breaking out. So that's on oil. And then in terms of the counts, I mean, this is back to May 8th. Nothing really changed, so I haven't really updated this, but we might be looking at a C wave decline to kind of form a second wave low. Again, just this kind of in line with the overall idea of forming more of a right shoulder in here, and then this would kind of prepare us for the larger breakout. And then it's a similar story here again on the daily charts back to May 8th, right? We haven't done really much. So this 65, 66 level continues to offer resistance up to 67. So we'll see if we're going to get a little bit of a sell-off into the next couple of weeks, maybe, maybe next month, into the next month or couple of months, and then embark from there and move a little bit higher. You can see that overall across, right? Even the S&P 500 is kind of stalling. Bitcoin has been selling off, so we have a little bit of a shift toward more of a risk-off sentiment, but nothing really structurally damaging, anything so far. So let's take a look here at gold, and you can look here and you can see this is a quarterly chart of gold. So you're going back to the 70s on here, and I'm pretty bullish on gold. I don't think there's anything wrong in being both Bitcoin and gold bullish. It's these are I think totally different kind of asset classes, and they kind of talk a little bit in different languages. They have different type of investors, and I think gold is especially if it's closing with this bullish engulfing, let's say into the next month, there is a chance that we're going to continue to push higher and make new all-time highs in there. Again, just a structurally bullish market, and this chart kind of tells me that I need to stay looking higher in gold with any chance I get. Similar story here on the monthly charts. I mean, this is clearly a move against the trend. I'm going to show you the count here shortly as well. And you could argue that there's a possibility that this move back in here is just a simple X wave, and this is an ABC. You get an X and then another decline, something similar to what happened back in there. But you also have to look at it as as this move being kind of short, right? If we're beginning a new larger uptrend versus kind of what happened in here, right, where you've actually hit a much larger top in gold versus kind of what we have up into these levels. So if we don't have a failure back in here, I think, and we're taking up those levels, 1950 I think they are, then if we're able to kind of punch through them, gold is going to be beginning the new larger bullish uptrend. Here is the count. Haven't really modified this one since kind of April 10, just to kind of show you what we were thinking back then as the fourth wave was coming back here into about the 38% retracement of this larger advance, along with the bottom of this trend line. So just a pretty pullback, and it's choppy, overlapping, contained within parallel lines. It's just kind of a similar story what happens in Bitcoin right now as you're pulling back into that fourth, into the 38%. And, here is kind of what happened since then. The market's, found this double bottom. We've challenged those 1816 levels that I was watching. We're piercing kind of through this also resistance lies here at about 1880. And the next level to watch is this 1959, 1960 for a continuation higher and a break in this larger kind of third wave advance. So we'll continue to kind of monitor that. I started buying gold and increasing my, miners positions and, even spot back into these levels as the market were kind of failing to make new lows. And now with more confirmation, I'm even more optimistic on this. So, we'll see how the market will react from here. One thing to keep in mind, and I've talked about this a couple of weeks ago as well, is this kind of copper gold ratio, which is, something to watch when you talk about risk on sentiment. And a couple of weeks ago, we were making new highs in here, and since then we sold off. So this is a little bit of a negative, a little bit of a worry sign that the markets might be, moving sideways in here for the summer, or maybe not continue to be, ultra bullish for the near term in here. So I'm keeping an eye on this ratio as we're kind of pulling back in here. This looks like this could be a wave 1, 2, a larger third. This is a more of a sideways consolidation in wave 4. This is a sharp directional correction, right? Fourth, the guideline of alternation between the waves. And if this is a fifth wave, then we're looking at a little bit of a decline in the copper gold ratio, which means that, copper will pull back. Not necessarily turning fully bearish. It's just that gold would start to outperform copper, which is kind of what this is showing you, and then it's in line with also, you know, our pullback that we've, you know, our rally actually that we've gotten back here in gold. So keep an eye on this ratio. The black line here is the S&P 500. You know, usually kind of mimics this ratio as well. So if we're going to continue to sell off in the copper gold ratio, I have a hard time thinking that, you know, the S&P 500 will be super bullish. So either kind of sideways or maybe a little bit of a sell-off. So let's just kind of, you know, kind of stay with it. I'm optimistic overall into the assets, but it could be that we're entering a period of, you know, of pretty much going nowhere, you know, to sideways, while we're regaining our footing in here. And as the markets are kind of waiting to see what's happening with the Biden infrastructure plan, what's happening with the Federal Reserve, what's happening with the inflation. So I think overall we have, you know, a few triggers, right, and few things that the market is watching at the moment, and once those kind of fears are going to start to subside, we're going to kind of embark into the next bullish leg to the upside. Guys, please take a break and have some coffee, have an espresso, and don't forget to subscribe and like to the channel. You know, this kind of helps us, you know, rising into the YouTube rankings, and we've been doing well so far. You know, more people are joining and subscribing and watching our videos and kind of familiarizing with what we're doing in here. Besides, you know, Bitcoin and altcoins, right, we take a look at this macro field as well, because I think it's important and it kind of helps us, you know, stay into the right framework overall. So please subscribe and like. Here is a look at the global yields. I haven't really shown this, you know, too much, but we're kind of moving into the yield segment of this show, and then I just kind of wanted to show you what's happening across the globe, as some of these countries that had you know, negative yields for you know, for quite a while. I mean, you can see in here that France and Germany, right, had dipped in, you know, back in July of 2019 into the negative territory, and they've been kind of negative, you know, for this whole time. And right now we're kind of coming back out of here, which means, you know, those European economies are starting to kind of gain their footing and get stronger. You know, I'm actually really bullish Spain. I'm bullish Italy. If you look at some of those ETFs, I think they're getting ready to break to the upside, and this is reflected also into the yields market as well. So up there you see the Australian 10-year yield at 167. You have the 10-year yield at 162. The Canadian, right, and then Italy is a little bit higher than France and Germany. So here's are their kind of yield curves, right, starting at the 1 year, going all the way down to 30, and these are the countries, right? So you can see India actually is doing very well on this, and then you have China and Aussie, Japan, Italy, France, then, you know, Germany, right, Great Britain, Canada, and US. So keep an eye on the yields overall, because these are really good indicators of you know, for recovery that's in progress. And I think, you know, even if you look at the US in here, we've been kind of stalling onto this, you know, rise in yields. But I think this is still a very positive sign. It means that we're just, you know, kind of digesting this rise in yields, and the market are getting used with this new level. And I think we're going to be likely pushing higher to the upside. We'll see if Fed is going to, you know, depending on the rate of change of these yields, if Fed is going to come back and you know, do any kind of control on this yield. But for right now, things are looking pretty good. Here is a look at the 10-year yields as well, right? We've entered a new kind of range in here. We've had this kind of major flush down to, you know, almost negative territory. We never really actually reached onto the nominal 10-year yields, but you know, we pulled back. We're at about 163 at the moment, and this is, you know, just above a 38% pullback of the drop from last year. And you know, the next level to the upside to watch here is going to be 189, which I think it's going to get tagged, you know, after we correct a little bit more in here. And then the next level up here, it's about 220. That's also a level that you can see here on the horizontal lines as well. I think it's you know, it's a level that's going to offer a little bit of a resistance. So as long as we're not kind of you know, having this rate of ascent into the yields, right, because this is kind of what scares the market much. If we're doing something gradual, like something like this, I think things are going to be totally fine. And I think these levels, maybe even these ones at about 325, are in the cards moving forward. Maybe not this year, but into the next couple of years, that's very, very likely. All right, let's continue to take a look here at a little bit of what's going on between gold and the real yields. One sign, I mean, a couple of weeks ago we were looking at this, and we've had this kind of correction or move down onto the real yields, and gold was kind of rallying, and it continues to do so. But what's happening is I'm getting a little bit of a rise here in the real yields, and gold is not selling off. So this is telling me that if this continues, gold is going to have a hard time breaking through these levels. So I'm keeping a close eye on this, because if this continues to push higher, that means that this is very likely could be another X wave in gold, and then we're pushing back lower. So I have a little bit of a mixed signal. So I continue to watch the real yields based on that, and I encourage you to do so as well, because they're very, very well correlated. All right, let's jump over and take a look at the S&P 500. And this is something I didn't show, maybe never, but I keep an eye on it because I think it's an interesting chart. So this is a yearly chart of the S&P 500. So you're going back to 1926, 1928. And you can clearly see that last year we've created this beautiful bullish hammer after rejection of the lower prices, and this to me it's a pretty strong bullish sign to the upside. So every time you kind of don't trust what's happening in the market, or you have doubts about it, just kind of step back, look a little bit at longer term charts, and they'll kind of tell you clearly where this market is kind of heading. Sure, you can have corrections along the way, but at least it kind of helps you with the perspective overall. And this market, to me, it's as bullish as it comes, and I think it should continue, and it will continue to do so, right? If we're leaving behind the past year or the past 8 years, I think that the world economy should be kind of moving into a period of much bigger growth and economic development overall, with the rise of the emerging markets, developing markets, I'm pretty optimistic about the future, I should say. All right, let's take a look here at the 1 week chart. This is just slightly concerning. You have you're kind of tagging the top of this larger ascending channel in here, but if you're counting this as a 1-2 rather than a 4, which some people do, even I have a count that looks at this as a 4th wave and this as a 5th. You're looking at this as another 1, 2, 3, 4, 5 here, and a large expanded flat in a wave 2, and then the beginning of a new stronger uptrend. If this is the correct interpretation, this should just be the beginning of a much larger 3rd wave advance, and we could still be working a wave 1 of these lows, and maybe we're going to get some kind of a pullback, maybe back here towards the trend line. It's very, very possible, although this RSI here continues to look pretty good. And this kind of shows me a trending market. So let's see if we're going to take a break. Again, a little slight worry that we're hitting the top of this trend line, but again, I don't want to scare myself off, because just because you're kind of tagging those lines and necessarily sell everything. So let's see if we're going to be able to take some of these levels like 38.50 first, and create more of a topping pattern before we necessarily panic that there's going to be a big sell-off to the downside. Up here onto the daily charts as well, we're kind of continuing to hug this 50-day moving average. The markets sell off briefly below it and then continue to push higher. We have the 200-day below at about 37.23, and this will be a next level where if we're kind of closing below this, the markets will more than likely kind of travel to. We have some support back into these levels, so it's a pretty much same area where the 200-day moving average is. Right now, we're selling off a little bit. This could be just a simple triangle with the breakout higher. So kind of rough to read necessarily the counts, since the markets are moving sideways a little bit in here, and you don't really have a lot to go by. This to me, it's it looks like a flat correction here, 3 down in 5, and then here you can count this as a 1-2, and then you're making another 1-2 in here, and then you can push to the upside. Again, if you're thinking that, let's say necessarily this back here, it's a 5th wave, right, and that's a 1, 2, 3, 4, 5, or this whole thing is a 3rd, that's a 4th, and this is a fifth wave, you're really, really bearish, and you're looking at the collapse of the, global order or whatever, if the markets are going to sell off in some kind of an ABC pullback, right? I think these markets are quite distorted, and you can kind of see that in the continuous rise in prices. These markets are not necessarily, free to do whatever they want. We have a lot of support from, global banks and government fiscal interventions across the world, and I doubt that anybody would be willing to just let things collapse and everybody's pensions or investments to get damaged, right? So with that in mind, I'm looking at the price action and I'm looking at the charts, and it's hard for me to call for fifth waves when you're in such a big kind of secular bull market overall. All right, let's take a look at dollar a little bit in here and see kind of how that's behaving. Again, just a downtrending market ever since of March of last year, when we've had that kind of huge spike. This is kind of an inverse relationship with the euro dollar here at the bottom. Euro, it's about 121.8. Again, I'm pretty bullish Europe, so that means kind of bullish euro. I think this was a pretty deep correction here. This could be a wave 2, and this could be a wave 1 of these lows in a second wave into the 20-day moving average. We're beginning, the next sequence in here in a wave 1, maybe a possible short pullback into and then a continuation higher. Same story for the dollar index, as we're kind of breaking this trend line that was kind of holding. And, these levels here at about 89 are very, very important. We've talked about this rise into the 200-day as this rise here not being sustained, and kind of the 200-day offering resistance, I'm pretty right on that as the market kind of pulled back down. So, I continue to kind of stay on that theme overall with the inflation rising, and, I think the dollar will continue to get weaker overall. Maybe short-term bursts of dollar strength based on shorter-term moves into the risk off, but overall structurally, I think we're in a large downtrend. And here is what's going on. Let's say kind of going back to the 2000. This is a pretty massive level into the dollar index. This is around 88, 89, and the moment we break below this level, so I think dollar is going to be in big trouble, and very likely that it's going to go back here to about 70, or at least 78, 76, back to the next levels of support. So I'm watching, as everybody else is, this levels like a hawk in here, and see how the dollar is going to respond, right? Because the moment you kind of break below this, then you're moving into the next, the next levels into the dollar, and then this is going to become resistance, and the dollar will continue to get weaker, kind of based on that. You can see back in here, I have, the dollar and the S&P 500, right? Just a continuous move lower, just of the debasement of the US dollar and the United States currency in here, as the markets continue to make new high and dollar continue to lose against the S&P 500 overall. Guys, here is another look here at, where we are just in terms of the sectors overall. Energy and materials and financials continue to lead in here. They're losing momentum. This is, for the past, let's say 5 days, 5-6 days, up to a week. But in terms of the relative strength compared with the S&P 500, they continue to look pretty good. So this is all telling you that there's a shift from the tech sectors here, and from let's say more of a consumer discretionary view and tech back into this energy and materials and financials, right? So that's a Dow Jones Industrial mostly, and it's a little bit of a continuous shift towards value versus growth. We're getting a little bit of a pickup in momentum into the tech sector, so there's some gems in there as well that I'm watching. I think that's that's not definitely to be dismissed. So there's trades in there, and there are companies that look really well on some of these pullbacks that we've had, but we're getting this rotation kind of here continues, and money will continue to flow into a lot of these value stocks as we're rising the interest rates, and we're getting more into this kind of inflationary decade possibly, right? And then you look at the utilities and communication and real estate, just kind of not doing much here for the past few weeks. A little bit of a sell-off here in health and in industrials, but I think the markets continue to be bullish here. Maybe a little bit of a sideways move, and but there's a lot of things that you can find on there in terms of stocks. So come and join us into the pro room, and I'll show you quite a few interesting charts. I mean, things that we're buying, that we're selling in there in terms of stocks, and kind of what my views are in detail. And I'll leave you here to close this video with a very interesting chart of the Dow Jones Industrial Average. Back from 1900, right? This is your, Great Depression crash in there. And this is a log scale, obviously, and, clearly we're up into the right. So, if you're bearish on this chart, it's hard to be, because it's clearly an uptrending market in here, right? You've had this crash into the great financial crisis in here, just a nice kind of clean flat decline, and we're continuing to push to new highs in here. If this is a fifth wave, right, then the end of the world is coming, because then you're going to get a 3-wave decline, and that's going to be pretty ugly. And I don't know what's going to trigger that, aliens coming up here, or a world war or something. But other than that, I think we should stay positive and look for the world to continue to develop, and for us getting better at it, right? So guys, take a look at the Elliott Wave Cafe. You're invited. We're open 24/7. We have a pro room in there with a bunch of brilliant traders and guys that come in and try to learn and get really, really good at Elliott Wave and the kind of understanding markets overall. And we're continuing to grow. Here is what you can find on there. From the pro channel to the charts and trade alerts and stocks and the Elliott Wave course as well. We're really, really deep into crypto field mostly, and from alts and Bitcoin, Ethereum, and all that. But we're definitely following gold and oil and all these macro aspects across the field. So again, you're invited. Take a 7-day free trial if you want. Thanks again for watching, and subscribe to the channel. And don't forget to like us, and I'll see you next week for Bitcoin and Ethereum Elliott Wave analysis, and then a couple of weeks down the road for another episode of this Macro Cafe. So again, thank you guys for watching, and I'll talk to you later. Bye-bye.